Traders at UBA say that they expect the outcome of today's Treasury bills auction to shape the direction of the secondary market in the coming days. About 139 billion naira is expected to be on offer across the standard maturities. Chuka Nwachukwu, the head of bonds trading at UBA, joins me now as we discuss the trends in the market. Before we get into that bonds auction, the T-bills auction for today, let's first get into what the market has been like so far.
Okay, thank you, Ken. Market has been pretty quiet. We've seen little activities, especially on the T-bill side. This is because traders feel that yield will still inch upward. There isn't much attraction on the T-bills yield presently. If you see the rate at the borrowing rate, for example, is between 4.5 to 5%. So and then the T-bills is trading below that. So obviously, that is why we have low activity on that end.
All right, but on the auction today, though, what are sentiments like so far?
Yeah, sentiment is like the rate is at a rate we go up. The previous one came out at 4% last week, and the last one came out at 4.45. So we are looking at around 10 basis point movement in yield. So we're looking at around, say, maybe around 4.7 levels, or 4.75 or 4.8 if possible, because this is the level that most traders will be comfortable in.
But for you, though, what sort of catalyst do you think the market needs to get market to the levels that you expect?
We expect that the market should trade within around 7.58%, and that's where we attract a lot of interest in the market. And like I said earlier, if a borrowing rate is around is higher than the T-bills rate, and there won't be any attraction. So for us to bring back that attraction and to make the market more viable, we need to up the rate.
Well, now let's get into the bond space. I understand that there was some bearish activity in the 2026 and 2036 yesterday. Is that still holding up?
Yes, it's still holding up. Recall sometime in March, when I was on this your show, I said that yield will inch up from April, and that's what we are seeing. So a lot of people are, exiting their portfolios in order to position for the upward movement in yield. And so we've seen that over a couple of trading days now, upward movement in yield. For example, the 2026, is currently trading at 10.7 levels. And this was a bond that was trading around 9.95 about 2-3 weeks ago. So you can see that gradually the yields are going up.
All right, but in the medium term, though, what's your call for the yields, especially for the rest of the second quarter?
Yeah, still the same upward movement. We expect that on the long end, especially the 2050, we expect to see around 13.5, 13.7 levels. And so, everybody is looking forward to that. And, if you have position now, the best bet is just to get out of the position and then get set for the upward movement. But although I personally don't see yield move up to 14% within the immediate future anyway, but within 13 to 13.5 is fine.
All right, but finally, I'd like to get what your expectations are for March inflation. Looking at how we're seeing, we just saw the figures from Ghana now coming quite high.
Yeah, the last inflation figure for Nigeria came out around 15.7% levels, 15.7 levels, yeah. So we think that this inflation figures will slightly go up again. Hopefully the next should come out within the next 1 or 2 weeks. So, it's an upward thing for me personally, because if you look at what is happening, we are yet to recover from the fuel crisis. Things that seem to be sold at high costs in the market, and so all these factors that will make the inflation figures to go up. And again, I keep saying this is pre-election year, so a lot of spending and then this will obviously force government to bring out a lot of funds, and then of course the system obviously will be awash with liquidity, and this will obviously impact on the inflation figures.